What's up, YouTube? Today we're going to be talking about trading macro structures, swing trading, trading on larger time frames. So the 4-hour, the 1-hour, and the daily are what we're going to be mainly focused on in this session. So trading the 4-hour time frame right now, looking at GBP US dollar 4-hour time frame, we have a trend plotted right now. GBP USD is in a very nice uptrend, and I mean this is 2,000 pips or so. Yeah, that's about 2,000 pips in 345 days. So a little less than a year if you wanted to hold on to that trade. But before we really get into how to trade these trends, because that's what we're trading the trend, we have to understand how they're made, because there's someone behind the scenes that a lot of people don't know about that is actually structuring the market, whether it be a person or an AI, a computer. This is how the market is structured, basically. And we've had this pattern in multiple videos before. Basically, we have consolidation, where the market traps orders in one area for an extended period of time and then breaks out to either the upside or the downside and then whips completely around, does a complete 180 and hits all the stops that were up here and all the stops below where price was in consolidation here. So if we want to understand this better, here it is, basically. Right? We have that consolidation. And then, where are the stop losses? Think about this. There are people in here getting trapped. Where are their stop losses going to be? The stop losses of the sellers are going to be above the high, so that's anywhere in this range. And then the stop losses of any buyers are going to be below this low. And look what happened. Price came up to hit any stop losses of retail traders before falling, and then doing the exact same with that little gap. Gapped right below and then came back up to complete the whipsaw. And then what happens? This is really funny. I find this extremely funny. Literally the same exact thing happens, just inverse. So if we were to take this and flip it, that's what happens. So this is how the trend is made, you guys. This is basically how the trend is being created. Hitting the stop losses, taking out the retail traders. That's what you have to understand is going on here. Where are the stop losses going to be? Stop losses are above and below the consolidation. So, to make a trend, this is really the only pattern they need. And there's different variations of this, but I mean, look at that. It's over and over and over the same pattern. The same thing. No indicators were used in this video. Nothing. Look at that. Perfect market structure. Consolidation. Where are the stop losses? Here and here. Now, this is getting a little bit messy. But you get the point. I mean, it's really the same structure going over and over and over. And this is why it's so important to understand market structure. Understand where the traders are being trapped. And then react to how the market responds. So, what you would do in this situation is, first of all, graph out the trend, find the trend, and then when you see respecting the trend, respecting these trend lines, that is when you can decide to go on your 15-minute time frame. And from what you've learned in our previous videos on M's and W's and whatnot, you can find the right place to enter. There's a bunch of places to enter just looking at the 4-hour chart. A nice W formation off of this trend line, or that macro W, just going with the trend. That's all we're doing, is going with the trend. Now, what can we expect to happen if the stop losses have been hit? GBP USD is taking out the stop losses of any people selling, and what could we possibly see? A correction in the trend to hit any stop losses of any people buying now. Any buyers that are in this chunk of consolidation, or even in here. You could see a complete whipsaw like that. And the same thing goes for a downtrend, you guys. So, if we look at this downtrend here, it's basically the same structure playing out over and over and over. That one's a little big, but you get the point. Consolidation. These are where the orders, the retail traders get trapped. Then break out, hit any stop losses of any sellers that thought they could catch this maybe as a head and shoulders or something, or just tried to catch the resistance here as a sell. And where are the stop losses going to be? Up here, above the high. The stop losses are always above the high. Look left. Remember that? Remember what you learned as a retail trader? Look left. Oh, it's all to your left. Just look left. Yep. Nope, you need market structure. So, consolidation, hit stops high, come down, hit stops low, consolidate. This same exact structure, plays out on all time frames, including the 4-hour like you're watching right now. Okay, this structure happens on the daily, basically on the 15-minute chart as well, so as intraday as well. We can see consolidation all up in here, hit stops low, hit stops high, come back for more consolidation. And that's how both consolidation and the trends are being made. Now, if we go look into the macro, this is how we can understand the macro structure. So, if we realize that there's just basically one structure that is forming the entire market, we can find this over and over and over. This structure we found over and over and over. If this structure can be found like this, then all that we really need is a way to enter on a smaller time frame. So we would go into a 15-minute time frame, look for the highs and the lows of the day, depending on what you're entering, either long or short. But remember, do not take the trade until the stop losses have been hit and the retail traders have been induced the other way. Then, on a smaller time frame, say the 15-minute time frame, look for a W formation or head and shoulders that you can see as a reversal. Now, I'm sure in here, if you were to look on the 15-minute time frame or the 1-hour time frame, there would be a nice little W formation right there. So, the whipsaw here, I mean, it's crazy. Check that out. Brexit. This happened for Brexit as well. And this isn't just GBP USD, you guys. This is every pair. It doesn't matter. The pair doesn't matter, honestly. Look what happened. Hit stops. Hit the sellers. Take out the sellers' stop losses, remember. Get everybody in this chunk between 1.47 and 1.44. Let's keep them in that range for 42 days while we hit them and spank them with propaganda through the news that who knows what's going to happen. It's staring you right in the face. The setup, they had to set this up. They knew what was going to happen before Brexit happened. The structure was sitting there. Hit the stops low, induce the sellers, and then come up and induce long. Because you have to make them think it's breaking long so that you can steal right before you take all their money away. Look at that. I mean, this right here, this was a big green candle at one point. This was one big fat green candle. You know how many buyers were trapped up there? There may still be buyers trapped up there. They'll be waiting for a while, but you know, they got 2,000 pips back. I would not be surprised if there's still buyers sitting up there just from getting induced from all the news from Brexit. I mean, it was just they were piling on so much propaganda. But anyway, this is the same exact structure that we were looking at. The same exact structure. It's uncanny. And it's found basically everywhere. I mean, it's crazy. You can find it so many places, you guys. Sometimes it's not perfect, but you can see when it's forming. You can see, for example, here. I mean, that is absolutely perfect. Market came down and started consolidating in this one area, gathering orders, hit the stops high, come down, hit the stops low, consolidate once again. The same variation, a different variation of the same structure over and over and over. Sometimes they take little breaks like this. But it's really basically the same thing over and over, you guys. Consolidate, hit stops high, hit stops low, consolidate, and do the same thing over. Because that's the only way they're going to make money, right? So let's check out Euro US dollar. Yeah, this sell was very obvious. So we had a, this is the 15-minute chart, but anyway, we had 1, 2, 3 hits to the trend line. It was pretty obvious here that they were just letting sellers in to give them more time to sell, to get that 1 or 2 candles and hit their stop losses. Now it may even come back up one more time, but because that's, I mean, they're giving them a while. They're giving the sellers a while to sell in here. I wouldn't be surprised if we get one more hit up to take out the sellers and then a drop, because it's too obvious. But anyway, let's check out the daily. Let's see if we can find that same structure. That's what it looks like. So I think we found it right there. Nice consolidation. Hit stops high, come back down, consolidate, hit stops high, come back down. It's really the same structure over and over. Now, take this with a grain of salt. You're not gonna like be on the 4-hour chart just looking for this. You're obviously going to want to plot trend lines. You're going to want to plot trend lines and just follow the trend. Follow the trend until it becomes so obvious that you've been following the trend for so long that you have to say, wait, is it really going to keep going? I mean, this is so obvious. You can see here, this was a good example. 1, 2, 3. Are they really going to keep going? They broke out here. Consolidation. Hit stops high. Hit stops low. Just understanding that the consolidation is key, you guys. This is why Yeah, I always talk about structure, consolidation, and the highs and the lows. That's really all you need to worry about when you're trading. You do not need indicators or scanners. That's all a bunch of BS. And you don't need the news. You need to understand when the news happens and the structure, but you don't need to know like the stats about the news, how jobs are up 50% or something like that. You don't need to worry about that. Everything lies in market structure. Everything it can be found in the market structure itself. Okay? Everything else is for people that don't know how to interpret market structure. Okay? So leave the indicators for people that don't know how to read market structure. Leave the scanners for people that don't know how to read market structure, because that's all for people that doesn't know how to interpret the language of the market. Now, this happens on very large scales as well. Consolidation. This is very funny too. Okay, what happened right around 2017? This was actually this was when Trump was getting elected. Everybody was saying, woohoo, make America great again. So what is inverse to the euro? This is the dollar. So the dollar was going up. Meanwhile, the euro was tanking. And all of the propaganda was talking about Trump being amazing. And I'm not biased. I'm not political at all. I don't care. I don't give a crap about either presidents. They're all, it's all staged. But that's how they affect, like, they were just used as puppets. All this pumping, all this propaganda, make America great again. They created such a bubble. Let's look at the dollar, actually, so you can understand this a little bit better. They created such a bubble here. Yeah, it was right here. When Trump was being elected. All this propaganda. Everybody was saying, make America great again. Everybody was wearing the red hats. It was just full on, make America great again. We're going to build the wall and whatnot. And then what happened? Right at the peak, they were saying that too. Just like people were saying, just like how on the news, Bitcoin was big, was finally getting big once it was hitting $20,000 a Bitcoin. You were hearing people on the news mortgaging their houses to buy Bitcoin for $20,000 a coin. That was all that was on the news when Bitcoin was hitting $20,000, right around here. Why is that? Because they need money. They need money. They're pumping money in. They've pumped so much money in, they need it back. They need to fill their wallets up again. And then now they'll probably do the same thing over. Now, this chart could go either way. Check out our channel. Check out Astro Trading for more info on. Basically, this is like the lunar analysis and how the moons, the phases of the moons, correlate with the market. But not to get too confused on, the daily structure that we see here and how the propaganda in the news was just all over Bitcoin, telling you to buy and just going crazy when it was at at $19,000 and $20,000. But let's go back to the euro once again. So it was all just to complete this one structure on the euro US dollar. That news, that propaganda of the presidency, the election, was just to make this. And I mean, that's crazy. That's absolutely insane. This is how long? This is like 2 years of work. That's about 2 years that they worked on this structure. And then they brought Trump in to fool everybody and get him trapped here. That's an elaborate plan. Wow. But anyway, hopefully you guys enjoyed this video. I know I didn't go too in depth. I don't want to go too in depth with this because there are many different variations, but just understanding consolidation and how it works, remembering that there's stop losses above and below the consolidation. Remember that. Always remember that. That's where they're going to be. Above and below consolidation, and they have to be hit. So, remember guys, always go with the trend. If you liked the video, smash that like video button, and I'll see you guys later. Peace out.